Good morning, everybody. How are you doing today? Okay, not okay? A little okay? Welcome to State of the Market. I'm Andrew Giovinazzi, Director of Education, OptionPit.com. Cool Hand VIX got 2 flies on already. I hope they're long. I have a leg going in weekly profit cycles. I sold some, I bought some SPY put spreads this morning. And if we rally over 610, I will cover by buying my VIX puts. Leaning on a trade. Anybody ever do that? Anybody ever lean? Anybody even know what leaning on something means? Maybe. So when you lean on something, two-way trade. Two-way trade is I'm going to buy a call and I'm going to buy a put. Or I'm going to, like in Rip Zone and in weekly profit cycles and with Mark and in Rip Zone, he's doing equity trades. You got a long and a short side. So if you know you're going to buy a strangle, you can buy one side and then wait to buy the other and see if the market moves the other direction. Anyway, so that's what I'm doing. So what I did in for weekly profit cycles, because I generally kind of try to scale into my trades, is this morning on the gap on the rally, I bought the SPY put spread side of the trade, knowing I'm going to buy some VIX puts later on. Now, if SPY broke down to, let's say 608, 607, I would just close the SPY put spreads, take my money and try it again. But leaving the remainder of my position on that I put on yesterday. Anyway, none of that might make sense to you. None of that might make any sense to you. Today, what we're going to talk about is trading VIX options. And the secret to trading VIX options, if you really want to learn, show up in our class tonight at 7 o'clock with Hannah. But I'm going to give you some inklings here today. So yesterday, if you were here, we talked about what makes up the VIX. And we will continue to do that here. And this is, I believe, our last slide. Going to get rid of the closed captioning and all this other stuff. And again, what's happening today, we'll go into right here at the end. But in general, when you're using VIX, positioning and trading VIX is a game of pricing. And this is what I said yesterday, the SPX straddle. SPX straddle being the call and the put 30 days out. Now, is there always a perfect 30-day straddle for VIX? Is there always a perfect 30-day straddle to price VIX? Meaning there's an actual SPX call and a put that it can grab. And the answer is no, there is not. Right? It only happens basically once a month when basically right at expiration. So how you trade this is VIX actually is, the idea of VIX is that is the at the money volatility of a 30-day SPX straddle. That's what it is. Now, again, if you want to trade VIX, you have to think in terms of this, because this is how the liquidity providers, the market makers. I was a market maker for a long time, about 15 years back in my youth. Then I moved to Maine. Alicia was a market maker for a decade and a half. Mark, decade. Hans, I don't know, 15 years, something like that. So everybody in Option Pit that are trading options have been market makers at one point for a decade or more. So we're probably 75, 80 years almost. Combined floor trading. Frank is our Washington insider. He just does stock picking. he's our what's next in what Washington DC likes. He lets us do all the option trading. So, right, we can't trade the VIX index. So if you can't trade the index, what do you trade? So if you think about it, there are multiple ways here, and I'm going to do a little thing here for you guys today. Let's see here. Is this me? No, I'm trying to find my notes for you guys. There we go. This is going to be the week of June 23. And today is June 26th. Okay. Okay. So what are we going to do here? All right. So VIX is not tradable for a retail trader. So how does that help us? You're like, wait a minute, Andrew, that's not helping, right? Again, VIX is the direction of volatility. A way okay, or as Mark likes to say, it's a way to trade the direction of option prices. So when you're trading VIX, you're trading 30-day option prices. So are option prices in aggregate going to increase in value? Calls and puts, right? These are calls and puts, or not? Are those going to increase in value in aggregate or decrease in value in aggregate? So when you're looking at this right now, if I'm looking at my live vol screen here, and I'm going to pull it up here, and I'm looking at SPX, right? And this is very, I would say today is very ordinary bull market style action. VIX is dropping a little, market's moving up a little bit, couple stocks are hot, just had a GDP number. Although right now, VIX is probably 2 or 3 points higher than it should be, given how high, we're trading it near all-time highs. So if we go out 30 days, that is now around July 22nd. They're actually giving us July 23rd. What's today, the 26th? So let's go to the 25th, and let's price the 6100 straddle. So the 6100 straddle call and put is trading, again, at the money, is probably trading $180, which gets us to where? Just barely, like, to 59.50 on the downside. Let's call it $190. So 50, 59.50-ish, low 59s. Sneakily around where the JP Morgan collar put is. And on the high side, what are we looking at now? We're looking at 6,300 upside. So our range is now 5,900, 6,300, but a little less than that. So here's my question for you. Do you think that range is too much or too little? Right? Do you think 59, let's say 50, I'm going to call it 59.50-ish, and 62.75 SPX, do you think that range is reasonable or unreasonable for the next month? I would say it's reasonable. Now, if I took the range down to 100, or if I took the straddle down to $150, Robin's saying depends on margin debt. People are taking on trade market higher. Robin, no, none of that hedging stuff. You either got to say it's a good range or it's a bad range. So the idea is, if you're trading VIX, if you think the range can go to 150, that would take VIX to, that we're going from where we are to there, that would take VIX down to around 13. So the straddle going from 150, from like 185 to 150, gets VIX down to around 13, 13 and a half. So that gives you a sense of even $150 gets you to where? That gets you to 62, 65, and that gets you probably down to 59.75. So what you can do is, well, that's what I'm telling you. So if you're trying to trade VIX, the easiest way is to look at what the straddle is and what is reasonable. Do you guys get that? So if the 61.25 straddle is trading right now, it's trading 183. Let me see here. I just had that doc up. Okay. And 186 is giving us a what? Hold on here. I just got an alert. Are we ripping? Oh, Qualcomm. That's good for my my flash fibers. Starting to make a couple bucks in there. All right. So this is so again, so right now, now again, 36 points as a percentage of 186. All right. I know this is all just like trading nuts and bolts divided by 186. Oops. Okay, that's about 20%. So 20% of 16 and a half is around 320. Right? So I'm saying right around 13 and a half. So what I've done here is I've just made you a market in around how VIX is going to move. B Dryer is asking, is the straddle a rough approximation of the estimated move? B Dryer, I would say 100% yes. So now, as a market maker, you know what the most frequently asked question was by brokers? Right? Trading floor, broker, call phone, broker yells into crowd. Yo, SPX, what's the straddle? Yo, Conseco, what's the straddle? Right? That would be the near-term straddle at the time. They didn't even ask for the month. They just always wanted what the most recent straddle value was. There was only monthlies back then. So what I'm trying to give you here the SPY straddle going to 150 would be a lot. Although, as I recall, I know it did get pretty high in the COVID. There was a straddle that got really high in COVID, like $100 straddle in SPY or something crazy like that. And it ended up being underpriced. So do you guys see what I'm doing here? As I price the VIX, I'm giving you the straddle values. So if right now today the SPX straddle, remember this is the 30-day option price, right? Or what we'll call the VIX straddles. $225, as I recall, is usually around a 20. Okay. Is everybody that's in here right now understanding the logic I'm trying to give you, trying to estimate how VIX is going to operate based on the straddle price moving up and down? Did you ever think of it like that before? Except for some of you pros that have been here for like 10 years. I don't want to, I don't want to hear that. But have you ever like looked at the market and say, what is the market telling you? So here's another thing that you want, like at Option Pip, the biggest thing we try to teach here is, right, Hans does this, Alicia does this, Mark does this, I do this, Frank tells you what's going on in Washington. But what is the information the market is giving you right now? What info can I take from just looking at the screen? Now, a lot of you have probably done something much more useful with your lives than I did when I was younger. You know what I did? I stayed on a trading floor all day long and I looked at screens. That's all I did. I looked at the screens. I looked at the tape. I yelled at people. I cursed at them. I threw shit at them. That's what I did. Okay. Alicia did it, but she wore high heels and looked really nice doing it. Okay. Me, I a little rough around the edges. However, you learn things, right? You learn things. Yes. So the idea is Alicia used to run her crowd wearing, Louboutin shoes. Okay, so now there's a lot of questions about the calculations and stuff. So do you guys, what I'm doing here is giving you a general back of the envelope estimate of how the market prices these things. Does everybody understand that? So some of you are going to get some statistical stuff kind of messed up. with general values, right? Oh, Alicia wore the shoes, by the way. Alicia wore the shoes. I'm just letting you know. She wore the shoes. Okay. So I don't want your heads getting wrapped up in kind of what daily statistics, daily standard deviations are. Because VIX, don't forget, VIX is not just the straddle. There could be a little bit of a variation from skew and other things like this. I'm giving you very sort of broad stroke. But this will be 20 VIX will be within a point or two of 225. 18 VIX will be within a point or two of 200. 16 and a half VIX right now is 186 exactly. 150 is around a 13 and a half. The lowest I've seen the 30-day straddle, I believe, was 80. So right now, the SPX straddle going to 80 is a 899 VIX, and I believe that was the lowest I've seen. Okay. Now, again, there's a little variation in this, but what I'm trying to give you here is a rough idea of how these things work. So put it this way. How did you do these calculations? WNA, I've been doing this for 32 years. That's how I do these calculations. I watch the same thing over and over and over and over again. What's the one thing that's not changing in any of this? When you look at this list of information I just highlighted, what's not changing? What's not changing? Just 32. Actually, it's 36 now, but I lied. My understanding. Rawhide, you're not helping. What's not changing? Are we talking about the same 30-day period no matter what? Is that the same 30-day period? Yes, 30 days out, exactly. So as VIX increases, this is what I'm giving you is a general idea of how this SPX straddle will price, right? The fact that the straddle is around 225 will deliver a 20 VIX. The fact that the straddle is here wags the dog. Peter 87, the math is what it is, but how do you use this to be a better trader? Oh my gosh. What else do you want for free, Peter? Do you want me just to write you a check? Here's the thing, Peter 87. Did you have any idea how VIX was going to move before you walked into this class today? I'll ask another way. If you want to trade the direction of volatility, what do you have to have a sense for first? If you want to trade volatility, VIX direction, what do you have to have a sense for first? if you right? So you need to have a sense whether the straddle value is going to be compressing or increasing. Is it dropping or is it expanding? Because what happens is the market gets relatively happy, stocks go up, and the straddle value starts to decrease over time. So it's sort of like, do you want to get in the way of that? If you get in the way of that, right, VIX is going to continue to go down even though you think it shouldn't. Jose says, yes, how often do you look at that straddle to determine that? Usually a couple times a day, Jose. And also what I look at here, one of the tricks in live vol is nice, is that you can see how the volatility of the strike is operating. You see how it's gotten very flat here? We had a pronounced drop on this strike, and now it's flattening out a little bit the last couple days. Right? Also, the volatility of the strike at 1320 is starting to approach realized vol, but you know, from that point of view, for us to take the next leg down, traders have to start pulling the plug on options that they own. They have to actively start selling. Like protection, downside protection, all that stuff has to get smoked. Where else can we see this apart from live vol? The only I could tell you to do is you would have to mark, a straddle that you pick, MKP. There are some services that have this, but if you're going to be an option trader, you should have a tool if you expect to make a living doing it. But what this does is I'm giving you a way that this is how the market is looking at this, whether you are or not. That's how it works. And right now they're trading this around 190, like 180 bucks. I would say about the lowest this could possibly trade straddle is 150. Now I have other tools basically, and WNA is asking, do you follow the Q straddle trend? I will look at that in our Edge Hunter tools that kind of change the stuff around. But mostly because most of my products are SPY related, WNA, I kind of just stay in SPX and SPY. It's just, I only have so much mental energy at any one point in time. But the Q could give you something as well. Right now, another one would be there's correlation everywhere, like looking at SMH. And now it looks like I'm probably going to have to buy some. I'm going to have to buy some my VIX puts. My big leg didn't work, so I got to go buy some VIX puts. I was hoping for something easy, but no. Give me 1 second. And what did we buy? The 19s? 19 and a half. All right. There we go. All right. Onward and upward. All right. So, where does this go? How are we going to get down to that 150? So, tonight, I'm going to tell you how that is possible. 7 o'clock. There's links somewhere. I believe there's a link somewhere. Hold on, let me get it for you. Let me see. Free. I will be telling you how to do it. All right, hold on here. I had it. I didn't have it. It'll be coming here certainly. No. There we go. There it is. All right. Thank you, Vicky. Yep. Is now a good time to buy VIX call spreads for protection? As a rip zone strategy, we always are long a little something, but I don't know if you're buying it to make money. I think it's going to be harder. There will be a replay for tonight's video. Will be available tomorrow. Right, but tonight, I lay out the case for how does a straddle go from basically 186 to 150. All right. I just hope it doesn't do it all today. It's always how it happens, Jose. At least I won't be grumpy if it does. All right, everybody, have a good day. We'll see you tonight, hopefully. And again, we'll put this out kind of as a PDF or something. And I'm doing Rip Zone. And yeah, sure. Talk about Cisco. Yep. And anything. You guys have a good day. Hopefully you learned something.